Imagine being turned down for an apartment, not because of your income, but because of your credit. Imagine paying higher insurance rates, not because you're a bad driver, but because of your credit. Imagine being denied a job or a professional license, not because you lack skills, but because of your credit report. That is what we're talking about today. This video, I'm breaking down how gatekeepers use bad credit against you in housing, insurance, employment, and professional license, and why it's so important that you understand the system. We're going to talk about it today. Let's get to it. Welcome back to another Credit Clarity Tuesday. So this is my second Credit Clarity Tuesday, using these different topics to educate you on what is going on in the credit world. Some things that you might not have noticed or even understand. So that's what my job is. My name is Starr Carter, and this is the Starr Carter Personal Finance Channel. If this is your first time joining me, please consider being a subscriber to the channel by clicking on the subscribe button. Make sure you guys like this video and share it with others that might need to have the same content, okay? I do appreciate it. Let's get into today's video. Most people think that credit is all about borrowing money. In the real world, credit is so much bigger and so much more important than just borrowing money. It's not just a financial tool, it's a risk assessment tool. Gatekeepers such as landlords, employers, insurance companies, licensing boards, they use this tool to answer one important question. That question is, can we trust this person? Credit report has quietly become a character report. Whether you like it or not, it affects areas to access to, like where you live, how much you pay, what careers you can pursue. Let's walk through these areas together. Let's start with housing, because this is the place where most people feel it first. Landlords and property managers uses your credit to decide if you can rent, how much a deposit you would need to pay, whether you need a co-signer, or if they will reject your application altogether. Two people can have the same income, the same job, and want the same apartment, but if you have a bad credit profile and the other candidate doesn't, you will be denied. It's not because you can't afford it, because you make the same income, but it's because your credit profile is bad and that makes you look risky. And if you saw my previous video, I talked about risk when I said if I needed to rebuild my credit in 2026. I kept repeating the word risk because that is what your credit report is. We're not talking about credit scores right now. We're talking about what's within the actual credit report. And that's what they're looking at for your risk assessment tool. But even when you're buying a home, those things will also be impacted. Bad credit means that you're going to get a higher interest rate, fewer loan options, bigger down payment requirements, or not even getting approved at all. So before we can even talk about jobs and careers, credit can affect something as basic as where you simply allowed to live. That's gatekeeping. Let's talk about something else that most people don't expect. Your insurance. There was research that was done. Did you know that if you have a bad credit profile, the research says that you are more likely to have an insurance claim than somebody with an excellent credit profile? That's what their research is saying. In many states, insurance companies use credit-based insurance scores. That means that your credit can affect car insurance rates, homeowners insurance rates, and also renters insurance rates. You can be a safe driver with no accidents and still pay more than someone else simply because of your credit profile. Again, two people, same car, same driving record, same neighborhood, but the person with the bad credit has to pay the higher premium. The system automatically assumes that if you have problems managing your credit, then you will be the person that filed more claims. Is that always fair? No, but it is legal in most places. So that's why having excellent or good to excellent credit is where you really want to strive to be. That should be your number one goal. Because having bad credit costs you so much more just in your regular bills every month. Let's look at employment, and some of these may shock you. Because bad credit can hurt you in the job market. Many employers, especially in finance, management, government, and positions with responsibility, will definitely check your credit report. Again, we're not talking about credit scores, we're talking about your credit history. They're looking for things like unpaid collections, judgments, tax liens, and patterns of financial irresponsibility. Someone is in serious financial trouble, they might be distracted, stressed, or in certain roles vulnerable to pressure. Or a person can be completely qualified on paper, but still get passed over because of what their credit profile shows them. This is another area of that gatekeeping. Most job postings will not warn you of this. Since we're talking about employment, let's talk about professional license. This is where bad credit can block entire careers. Credit can be reviewed by a real estate license, mortgage lending, insurance agents, financial advisors, government roles, security clearances, contractor license, and many regulated professions. It's not all about just skills and education. Licensing boards often look at your credit report as a means to know your character and fitness reviews. Unresolved debts, unpaid taxes, or financial mismanagement can delay or even deny your approval. Someone can actually go to school, get trained, pass all the exams, and still hit a wall because of their credit history. This is a serious form of gatekeeping, keeping people out of some of the very lucrative professional careers. Now let's pause and let's think about something else, and this is very important. Low credit score by itself doesn't usually block you. What really causes problems is unresolved debt, ignoring collections, unpaid judgments, patterns of late payments, financial chaos within a plan. Because it shows really that you don't have a plan. Gatekeepers are usually less concerned about past mistakes and more concerned on what are you doing now to correct that behavior. You actively trying to take responsibility for your past mistakes. Someone that is actively trying to repair their credit looks a lot better than someone that is trying to hide it. Here is the big takeaway. Credit is not about just borrowing money. It's a gatekeeping system that controls access, opportunity, affordability, and mobility. The goal of this video is not to scare you, but to wake you up. Because once you understand how credit is used, you can start protecting yourself. Because you can repair it, you can rebuild it, and you can stop letting it keep you or block you quietly from your future. If this video opened your eyes about some of the gatekeeping tactics that are out there, I want you to do me a favor. If you're not already a subscriber, I want you to subscribe to the channel. That way you don't miss out on other content just like this. I also want you to share this video with someone else that might need to hear this content as well. And guys, drop me a comment. Which gate surprised you the most? Housing, insurance, employment, or professional licensing? Which one really did surprise you the most? Leave me a comment. So that is today's video. If you really enjoyed this video, I want you to check out this next one where I talk about if I had to rebuild my credit in 2026, where would I start? What would I do? Check this video out next.